Hi, and welcome to Invest in You. Today, we've got another great founding father of a company, which is very much in the intersection of investments, AI, information, data, and that's super topical today. And I can't wait to jump into this. So, welcome to the show, Ali. How are you today?
Doing great. Frederick, thank you for having me on.
Yeah, no, it's absolute pleasure. So again, I could say a lot, but I'll try to keep it short here. So for people who had never heard about Ali Dasterdi before, here are a few words to summarize. So he has been working with a lot of the investment companies you might know about, who's got like many hundreds of billions of assets under their own management as providing services to them. So he sits right there. AI, investing, decision making under pressure. So that is super topical today as well. AI native platform helping private market investors source and research, do their homework. The company name is Raylu. Please feel free to correct me if I'm wrong with the pronunciation. They have raised finance, they're growing. And I even got one of the early posts from his LinkedIn hiring of the first engineers for later in the episode. So let's dive in. How did you come up with this interesting intersection of these super value strong industries, AI and investment, just to mention two of them?
Yeah, I can tell you a little bit of the origins here.
Yeah.
I studied machine learning in school. That was my degree. I never actually became an engineer out of college. I joined an investment firm here in New York City called Insight Partners. Insight
Yep.
is one of the largest global software investors. And I joined a team there pretty focused on technical investing. So developer tools,
Yes.
software infrastructure, what at the time was called ML ops. And so that was my life, was investing in AI products.
Yes.
And the last kind of investment that I ever kind of looked at when I was working there was a company called Jasper at the time.
Yep. I'm familiar with them.
Winding the GPT clock a little bit back, Jasper was one of the very first companies to leverage the original GPT-3 models to really revolutionize how marketing was happening. And
Yep.
there was this kind of aha moment for me that was like, look, an enormous quantity of the work that investors do to find companies they're interested in, research markets, build relationships with management teams, diligence those businesses, is going to change really drastically
Yep.
with the world of LLMs. And so started on a journey to build a company with that core focus.
Yes.
And so that's kind of some of our origins is, I was in the thick of it and decided to build something to make my own life if I was still an investor a lot easier.
Yeah, no, that sounds great. I mean, there are so many ways how to do this. We have had another guest on the podcast. His name is Richard Wilson. He works with family offices, and this was probably a year ago when we had him on. And he had already at the time like 30 internal AI tools for their family offices that he was providing to his services. So again, for you out there who are not interested in any of these topics, you will still get something useful from this because this is not like a demo about the company and what they're doing. This is much more around how to understand using AI and machine learning as a tool to simplify the judgment, how to work with trust, as well as to have the final word in the hands of humans, but with some support. So why do people want to have like decision support with so much data at the moment?
Yeah, it's a good question. If you think about fundamentally the problem space that both investors and entrepreneurs deal with is that there's a really difficult matching
Yeah.
problem, right? There's an enormous amount of capital and a lot of many investors with really diverse opinions. By the way, those opinions change drastically over time. So even if you had a reasonable snapshot, it gets outdated pretty
Yes.
instantaneously. And an extremely rapidly evolving universe of companies. Again,
Yep.
any given snapshot changes really rapidly. And so that matching problem is just genuinely really difficult to solve. If you think about the analog to public markets, there is near perfect visibility, right? Public companies have extremely succinct reporting requirements. You can log
Yep.
into a Bloomberg terminal, everything is there. And so both sides of that market are super transparent, but
Yes.
almost none of that exists in the private markets. And so that's kind of where we see AI as a super high leverage point.
Yeah.
There is way too much data. That data is extremely messy in every regard imaginable. It's constantly changing, and preferences are constantly changing. So what you even want to extract out of said data is never the same day in and day out.
Yes.
And that's why we think AI is a really powerful product here. You can think about mass swarms of AI agents as having, hundreds of thousands of interns whose only job it is to take your mandate, chew the
Yeah.
data, comes back to you with what's important. And so, there's a lot of interesting use cases of AI, but we think the signal to noise problem is probably the one of the most high value, and that's kind of where we focus.
Yes.
Um, there's probably two other factors maybe I'll mention that as maybe entrepreneurs think about where to leverage AI or just how to think about it internally that we think about a lot. One is just about risk. So, it's really risky to deploy AI if you're, in the last stages of diligence on $100 million
Yep.
deal.
Yes.
Like replacing lawyers or financial DD or something else there is like a very risky proposition for AI
Yes.
to do, and probably not for today. But when it comes to your very top of your funnel, the risks are a lot lower. I mean, the maximal risk you really assume is like you spent some time looking at something that was maybe not that interesting. And so the risks are a lot lower. And the second thing that we think about is just about how tangible is the ROI.
Mm.
No offense to many people who do this work. And I also spent many hours of my life as a junior investor late
Yep.
at night doing this work. But, most funds believe that they diligence companies pretty well. Most funds believe that they do a lot of things really well. But almost every fund on planet Earth believes that if they could see a few more deals, they would be either better, do more deals, make better investments, whatever it might be.
Yes.
And so there's a very tangible line between what an agent does and the results that you get. That comparison for some institutions is different when it comes to work that making it more efficient doesn't necessarily mean there's business value to it. So
Yep.
saving some people time is never always the most valuable thing. And so that's how we think about it too, is that it's not really about time saving, it's about seeing more
Yeah.
where we see the value. So that's kind of the two frameworks we think about like why AI is really valuable here.
Yeah, I mean, I'm very much in the investment space myself, the direct investments into the private market. So this completely makes sense to me. And there are so many different products how you can, for example, have the outreach or finding the targets to again the light touch due diligence, the legal a little bit as well, and even like the legal link to HR. So there are many small aspects where you can use AI at this stage. So rewind a little bit. So now let's go back a few years. So you were early on this, and very much when Chat GPT-4 was starting out, and you, if I'm correct me if I'm wrong, you also had like almost like a small pivot there early in the beginning. Um, so we just had a founder the other day on the podcast, and he was also really disrupted because actually many of the founders in AI that we've had have been very disrupted when all of a sudden, almost like the whole core business is now automated, so they need to find a new angle. So how have you changed angle over the last few years?
Yeah, it's an interesting story from us.
Yeah.
When we started off the business, we're focused in kind of building like more of a core AI platform. And at the
Yes.
time, models like GPT-3 were one of many approaches to various problems.
Yep.
Like, for example, you would never have thrown GPT-3 at vision problems, at large scale prediction problems, at ranking or preference problems. And so when we first started off the business, we were like, look, there's the whole universe of mid-scale
Yeah.
specialized models, and then there's GPT-3 for certain use cases.
Yeah, I know.
Um, and time and space changed really quickly here in all sorts of different ways. And so we had to react to it. When it basically came a moment where I have a lot of friends who work in high levels of machine learning. It's my background. And so I was talking to a few friends who at the time worked at Anthropic. And I was like, okay, look, you disrupted my business one time already. Like,
Not
tell
again.
me, where is this going? Like, where is the landscape really going?
Yeah.
And, even 3 years ago, it was becoming pretty evident to the people working at the forefront here that what I would describe as like mid-scale models would die.
Yeah.
Um, and essentially, rewind the clock. It used to be even rewind the clock a year ago. People believe LLM scale models fine tuned to particular problems would be useful, and even that is dying away. Where really generalist mass scale models you don't need to even fine tune them. Some levels of preference tuning and doing late stage reinforcement learning does change some models' performance,
Yes.
but we're increasingly getting to a world where like generalist models are the future. And so thankfully, we come from this world. And so we had a little bit of perspective in our first pivot that was like, okay, these models
Yes.
are going to get really, really, really smart. And so when we pivoted the company, one of the things that we wrote on the whiteboard, like I'll never forget, me and my co-founder said, we want to be cheering every time a new GPT comes out, not
Yeah.
crying.
Yeah.
So as we
Okay,
think
good. I
about
like
what business to build, how do we benefit from these, and instead of uh, be upset about what's happening with the future there. And so today, even when you think structurally about like what Raylu spends most of its time focusing on, we think about our problems as like don't solve what we call agentic intelligence problems, because the agentic intelligence problems will solve themselves over time.
Yeah, got it.
Solve problems that are for our particular use case and our particular scale. So realistically today, if you rewind or even our tech stack, it used to be that for us to give you an accurate answer on, for example, what customer logos does any private company have? It's like a common
Yep.
question our investor asks. It's like, get that data. It was really hard. Like we had multiple models around multiple types of processes to try to get an answer accurately out of it. At this point, we throw 2 to 3 calls of the most powerful frontier models of the problem. They have like nearly 100% accuracy for us. And so instead, we devote all of our engineering resources to the problems that we think don't get solved with agentic scaling, which is,
Yep.
it's pretty easy to solve that problem for one company. It's not easy to solve that problem for 30 million companies. And so all of our engineering is devoted to that problem, not to the problem of like, literally in between an LM call, where is the intelligence? And so that's kind of one thing we think about. And like one thing I encourage a lot of entrepreneurs working in this space is like, how much of your engineering is going to making models smarter? Because in reality, like if you think of it as like a CapEx model, every dollar of R&D you're spending on making models smarter, that's going to amortize to zero
Yeah,
in
exactly.
like 6 months probably,
So
because
no,
it's
it's
going
so
to go
fast at the
away.
moment. Yeah.
Yeah.
So
So
well, going back to roughly the same 3 years. So the first post I could actually see on LinkedIn for whatever reason, I will pull up my notes here. So roughly 3 years ago, you wrote the following. And for people out there that are hiring, what I really like about these few words I will share with you is generic yet specific. So think about an open post. I do understand that you have no idea what I'm about to say. So basically, looking for hiring founding software engineers who are technically fearless, egoless learners, willing to wear many hats, and ultimately they are operating at the core of entrepreneurial building. That's pretty clever.
yeah, it's been a while since I thought about those words.
Yeah, and you still probably have. I really still hope you have some of those people still with you today.
We do, we do. Yeah, that's funny. Yeah, I mean, when you're hiring for a really early stage company,
It's hard.
um, it's hard in all sorts of different ways. And I think all of those things that we put in that job post, we really mean. Maybe the one thing that maybe is not on that job post that I think a lot about as we've grown our team and we keep hiring is we really think about the idea that when you join a startup, it's because you want to do something outsized to what the world will offer you. And
Yes.
what I mean by that is like, at the startup, maybe it means that you get to wear way more hats because there's just not that many people. And so you get to have a
Exactly.
diversity of experience. Maybe it's that, we give our team super high lateral ability to try anything. Because if it's going to work, like great, and like you want that potential. It also just means that we grow faster than other places. And so I don't know, the first thing I ever say when I meet candidates is like the reason to join us is that you want to get something outsized out of this. And like if you make sure that you know that from day one and you tell us from day one, like that's all we care about. Um, it's funny. Our entire sales team today uses Claude Code. Because they're the kinds of fearless people that like even at a salesperson level, like they build systems and automations for themselves all the time. And like, one of the things that they get from being in a tech first organization is like they also have like a real engineering team supporting them
Yeah,
whenever they run
yeah, that's
into
good.
bugs or issues.
That's good. No, I like that a lot. And also one thing that many of you listening to this who are still in your first five years or so, one sad thing is as a company matures, relatively often, you need to find a new level of people. Because you reach a new level of maturity, and sometimes also as a founder, you need to unlearn what took you to where you are today, will not take you to the next step, whatever that might be, in terms of revenue or targets or whatever. But one thing there, you have early on allowed foreign capital, and I know a bit more about the story, how you ended up there, but how did you get started first? Because AI is the temptations to do like bootstrap, but someone recently liked what you do so much, so they can like tease you to get like, do you want some more money? Tell us about a bit about the founding first years for from a money point of view to in an educational way.
Yeah, makes total sense. We raised capital really early on.
Yep.
I've actually kind of regret doing that in some ways. And I'll be open about that.
Yeah,
So
please.
the reason we raised capital early on is honestly like I come from venture
Yep.
and my mental space was you have to raise money, you have to raise money, you have to raise money. It's just where I
Yep.
came from, and it's like what
Yeah.
I believe. And
You
so
can
that's
grow
what we set
faster.
out.
Yep.
Yeah, we can grow fast. I mean, there's all sorts of reasons to do it, but I actually think there's a lot of reasons not to do it when we did. And the real reality is like we raised capital, and then the world changed underneath us really quickly with
Yep.
LLM models, and it meant that we had investors with a lot of expectations who'd given us a lot of capital. And we as a company were at a state where like we needed to explore because the world had changed and we needed the
Yes.
breathing room to do so. And, it meant that we had investors that had put a lot of pressure on us. And, they're incredible investors. Don't get me wrong. They were very
Yeah. Yeah.
supportive, but,
No, with it.
you know, it, you could still feel the pressure. And it also meant that early on we hired we've hired founding engineers to join our team
Yep.
who it's one thing to be a founder working through product market fit and discovery. It's very different to join a team as an early employee to do so. And it meant that in the early years of our journey, like it was hard. It was hard. Like I'll be honest with you. And I wish that we had either raised no capital or raised much less capital until we figured out that moment of product market fit.
Yep. I'm with you.
Um,
Yep.
so I'll be transparent about our early funding.
No, no, that's
Um,
good. I mean, this is super helpful. I'll add some comments as well. Please carry on.
Yeah. And this is maybe not true for everyone. And like, this is one of those pieces of advice that it's always easier said than done. Like, I'll always remember, people say like, what is the number one thing that people in business never understand until they've experienced it, which is like fire fast. And it sounds brutal and it sounds
Yep.
wrong. But it's bad for you, it's bad for the employee, but you never feel it until you've experienced it once and you're like, oh gosh, like I get it now. And I feel similarly about this. It's like it's so enticing early on to raise a lot of capital. It's early on you believe you already have product market fit. Like you
Yep.
have the idea, you have some signs, and like you're like, why would I slow down? Um, but I would encourage a little bit more slowness and a little bit more you know, diligence, I guess I would
Yeah.
say,
Yeah.
that we didn't have. And like if I were to ever start a company again, let's say Raylu exits,
Yep.
I have a very different philosophy about that early on. And it also definitely comes with like, should you or should you not raise capital really, really in those early days? And by the way, there's all sorts of other situations. Like maybe you should raise a little bit of capital because you have a family, you need a salary, and like there's a lot of like
Yep.
accelerators and pre-seeds that can help with that.
Exactly.
Um, but we could have bootstrapped for longer and we didn't need to raise anywhere near as much capital as we did in the
Yeah.
early days.
So
That's a lesson that we
yeah,
learned.
no, that's super helpful because I love transparency and honesty. So I've been helping a lot of companies, been part of many companies also having venture capital. Usually it comes with very tough terms. So you need to surrender a lot of equity and the contracts you sign are not to your advantage at that stage, or even later. So you need to surrender quite a lot for relatively little money, but also, like you said, it can also help with feeding your family today. You can grow much faster, and also you mentioned the high, not you didn't say higher fast fire faster, but you said fire faster. You can actually in a way do the same with investors, because usually different investors have got different time frames. So you can actually, if you are like stuck somewhere, you can actually fire your investors, because often when you come to later stages of like series A, B, C, and so on, often the whole new series is replacing the previous investors. And especially if you go into private equity, they almost always like to buy out as much as possible of the small pots. So it will be maybe the founder, maybe an operating director, and themselves having the whole cake, so to speak. So you can exchange your investors. And I mean, one of the top 10 biggest IT companies in the world, Oracle, the founding member, has been buying back shares. So he's increased his shareholding again and again and again. And now he's actually one of the few that holds a lot of the equity himself of those big billionaire players. So yeah, different ways to do it.
Different ways to do it. It's not one size fit all, and I
I
say,
know.
don't
I
get swept
know.
away. It's maybe the
Yeah.
advice I'd give to a younger LD.
Yeah, exactly. So I found a really good clip on you online, where you talk about that actually you didn't come up with the idea for like next founding round, and I'll talk about your Series A, but actually someone else knew what you were doing, and they liked it so much, so they actually like, okay, we would like to invest in you. Can you tell us a bit of that story? Because I think it's a great example right now for AI. So many AI companies, they get inbound calls instead of the typical. If you go back 10 years, we both remember how people were raising finance. And basically, you were out there with a pitch deck, but right now, people are contacting you instead. And if you do wonder, yes, I lost the electricity, but I have a backup for the Wi-Fi.
No worries. Um, I can yeah. So for us, we're kind of in a little bit of a weirdly privileged position where our customers are investors. So
Yes.
Highland X was an early customer of our product. They were using the product, they really liked the product. They also had spent a lot of time, some of the one of the partners, Will Sue, in his earlier in his career, and some of the earlier, more incumbent tools in our space. And so
Yeah.
they were a great early customer, a great design partner. And at one point, they kind of said to us, "Hey, like, are you guys raising capital at any point? Like, we're really excited about what we do." And so they kind of, for lack of a better word, preempted a process, which was really awesome.
Yes.
Um, and they were great investors to join us. They kind of pushed us to raise some capital from them. We were excited to work with them and partner with them. And they're a really hands-on investor. We're really excited to have them work with us.
Yep.
And it's kind of, it's funny when I used to be an investor. I'm actually thinking back to my portfolio of companies I work with, and I don't think I have ever tried almost any of the products personally. Like we like diligence users
Yep.
using them and like saw product reviews, but like I was personally never a user of it.
Yes.
And it's really unique to have someone on your board who like uses it. Like they like literally understand it day in, day out, has been um, really eye-opening for us. Funny enough, one of their team members, I mean, he was already looking to transition as an early investor to be an operator. He also joined us. So funny enough, Nick Landry on our team went from user of the product to
Yep.
investor in the product to joining our team. So
Yeah. Yeah.
it's that's a serendipitous cycle.
No, but it's a great example of that you're actually doing something right. So I think that's a really good example of the longevity and the reward of actually building something useful that people actually like. Because one of the tricks with AI is actually making something that you can take to market that people are prepared to pay for. And you have found a space which actually has got more money. I know many people who are investing into AI for the investment services, because why? There is more money there. Various subscription models, different ways to do it. So how have you found a way to monetize your services? Is it like recurring or reoccurring? And please explain the difference for those people who don't have English as their first language.
Sure. This is something that investors will ask a lot. So recurring revenue, annual recurring revenue or ARR, you think about it as a contractually recurring revenue.
Yes.
So you sign a contract, it is for a year, it renews in some context every year, and so it's contractually recurring. Reoccurring revenue, especially investors consider to be maybe like a slightly lower tier, where it's not
Yes.
necessarily that it contractually that it happens
Yep.
over and over again, but that the behavioral pattern is that you keep using it. So you can think about maybe Stripe transactions. So you're not obliged to always pay Stripe because they process your payments, but
Yep.
you certainly use it day in and day out because it's something that you use every single day. And so that's the delta there. That delta matters a lot. Believe it or not, a lot of investors have
It's a
our
huge
AI
difference
agents.
for multiples. Yeah.
Yeah, for multiples, for valuations. It's one of the number one things that our customers use our AI agents to label. Is this recurring revenue or reoccurring
Yeah.
revenue? Is probably one of the first questions they ever ask of a company.
Yes.
Our contracts are annual recurring revenue. We
Yep.
sell on like
Good.
a traditional SaaS model to
Yeah.
our customers. One of the things that you just mentioned, Frederick, is that yeah, there is more money here. And one of the things, and this might just be true about where we are in the arc of AI or what it might not be, is that one of the really kind of powerful beauties of AI is that Raylu for one customer and Raylu for another customer can be almost entirely different.
Yep.
This is true in a lot of industries. So if you think about legal AI, if you think about compliance, other financial tools in AI, customer service in AI, you're seeing this huge trend where AI companies build these large forward deployed engineering teams or AI deployed engineering teams, whatever
Yes.
terms they're using. And it's because, with a little bit of engineering effort, you can get an AI model to work perfectly for you,
Yeah.
the
Bespoke.
same
Yeah.
way,
Yes.
and that means a lot in customer service, in legal, but it also means a lot in our world where, because we are able to sell to a larger customer who can purchase a expensive, not expensive, but a
Yes.
significant contract,
Yes. Yeah,
we can
exactly.
deploy the forward deployed engineering resources so that Raylu for customer A is different than Raylu for customer B. Which in our world matters a lot because if the whole idea is about proprietary deal sourcing and seeing signal, the signal we sell to one customer and the signal we sell to the other can't be the same.
Yeah.
And so some of that is like AI has made that possible, and some of
Yeah.
that does mean that like because we sell into an industry that has the capital for it, it means that we can devote the human resources and engineering necessary to also make those things
Yep.
different.
Yep. Oh, so I'm smiling. I got a side thinking about surely my youngest son here. He's studying engineering and he decided, okay, I will start to do my own like quant thing with AI. So, I mean, probably not too dissimilar what you're doing, but again, from scratch. So, yeah, it's very funny to see what people can do at home with limited resources. Yeah. But at the same time, the when you go to market, you're going to sell something, then you got the whole risk. You might have some compliance, you might have like the security. There's so many aspects to think about, which might not be part of the idea of someone sitting at home and doing some kind of vibe coding or whatever that might be. I'm not saying that what Charlie, the co-host, is doing, but yeah, no, he's learning to program, and yeah, I should send him to New York or to San Francisco to work with some interesting people.
Yeah, it's an interesting time. It's funny. I speak to a lot of young students in college from my
Yeah.
alma mater. It's interesting. If you look at some of the history of at least Harvard computer science kids that I've been talking to, all of the ones that are a little bit further in their years, so they're now juniors and seniors, they're on their third and
Yep.
fourth year. A lot of them have not studied computer science when they wanted to because if you wind the clock back a few years, there's a lot of layoffs in software, and there's this looming threat of what AI can be.
Yep.
But when I speak to younger students, so the ones that are in their first year at the moment, you're actually seeing a huge resurgence because it's less so that people are saying, "Oh my God, there's not going to be any jobs here
Yeah, no, I think
anymore."
that's BS, to be honest. I mean, you can't really have AI without no one understands how the code works at all.
Yeah, absolutely.
That makes
And
sense.
it's that we're now kind of over a hump where people are realizing, okay, yeah, it's easier to build software than ever before, but that just means the potential for software is bigger than it
Yeah.
ever has been
And
before.
faults,
And
faults within.
yeah, absolutely. And especially the entrepreneurial spirit to it. Like there are so many problems that can be solved that now the gates are open. And there's a lot of problems that don't need huge quantities of venture capital to solve. Like
Yeah.
they're very good bootstrap businesses that can be built that are software businesses. So it's interesting to see how in live time students are reacting to what they pick to devote themselves to.
Yeah, yeah. I got a lot of contacts with people who are at like yeah, graduation time, and they are in the UK, and they really struggle to get anything inside finance at the moment, like almost like all over the place. It feels like they are downsizing instead of upsizing. What is that gut feeling for New York at the moment in the financial sector? Again,
You
high
know,
level. I won't hold it to account.
I don't I think I we haven't seen much downsizing, but we know that fundraising is harder than it ever has been
Yeah,
before.
good
I
point.
think the way that I would describe that, from at least from what we're hearing, is it's not that people are not succeeding in raising their funds. They are. It's that raising those funds is becoming a little bit more diverse than it used to be. So, a large bulge bracket fund or a brand name fund would typically turn away a lot of LPs, and most of their
Yeah.
LP base are like large institutional investors. And we're seeing more of those funds be willing to work with multifamily or single family offices or even high net worth individuals
Yep.
to join those funds. Um, because there is a little bit of asset allocation is just getting harder and harder. Um,
Yes.
so that's kind of what we see there. Admittedly, we only work with a lot of the very large scale funds
Yeah.
and the kind of large and historied ones.
Yes.
And I guess the logical conclusion might be that if the LPs that traditionally put their money to smaller funds like high net worth individuals and single family offices are putting their capital into the large funds, there's likely a pretty good case that smaller fundraising environment. But yeah, I mean, things are tightening. I would say we're not in like, I would certainly not call it like recessionary, but I would say that it's more competitive than it ever has been
Yeah,
before.
yeah, it's competitive, and people are rather sitting on the dry powder than doing any big things right now because we got so many things happening in the market, whether it's private or open market. It's yeah, it's interesting every day. Yeah,
Yeah. I will say one thing we do notice is that the fund, I mean, both customers, potential customers, the pace at which funds are changing their mandates is really fast. So,
yeah,
I mean, it used to be that, let's say if one fund was like a 3-year cycle, you would pitch your LPs like, this is the core vision and thesis of this fund,
yeah.
and like that's what you'd invest in.
At least
And
X years direction. Yeah, I'm with you. Yeah,
yeah. And we're seeing funds change like core philosophies as to where they deploy capital in like 3 or 6 month periods, just because of the scale of disruption AI is bringing to technology, healthcare, business services, software.
yeah.
Um, Investors are reacting, and they're reacting faster than they ever have before.
Yeah, no, that's so true. So again, diving back into some of your founding lessons learned. So for people who are behind you in the learnings track, so to speak, the first few years, what are some of the things you would like to do even better or differently if you could advise yourself going back 2, 3, 4 years?
Yeah.
And again,
Um,
I won't blame you. It's just
no,
friendly
absolutely.
advice.
I think so. I mean, one of them is maybe just about how much capital to raise when. And,
Yep.
again, I think our investors are incredible and I love all the support they gave us, but we probably could have raised capital a little later with a little bit less money, is probably
Yep.
what I would say.
Yep.
I think maybe the other thing is, again, there's this old adage, and it's a hard adage to hear, which is that when you have product market fit, it's so overwhelming that you feel it.
Yeah.
And you say that to a lot of entrepreneurs, and they're like, oh, like, okay, sure. Like, yeah, it's just hard to internally rationalize. And you get some level of signal
Yes.
from someone, and you think that's product market fit. You pitch something, they say, yeah, I'd buy it. Or, maybe you sign your first contract, you're like, this is product market fit.
Yep.
And we went through a lot of iterations and a lot of versions of that did not become product market fit. And once we hit product market fit, it's actually crazy how overwhelming it was. Like
Yep.
the adage is true because when you do have product market fit, it's not that people will agree to buy or maybe would buy. It's that people rip the product out of your hands. Um, when I used to be an
That's
investor.
a perfect place to be, really, to have the right kind of things that you're selling. It's perfect. Sorry, just turn on the light over here.
No
No,
worries.
it's the good power back in the house. Yes.
It's good to see you back in the light.
Yeah, exactly. Right. So
Um,
I'd like to applaud you for the coincidence, randomness, or the conscious decision. So I've spoken to a lot of people working with AI out in San Francisco. It's perfect for growth, ideas, fundraising. But what you have as a competitive advantage, because again, I've been advising companies from all over the world, is your location. So where do these people sit that actually have got the biggest funds and the mandates? Well, they are not sitting in San Francisco. They are in New York. So that means that ultimately your ideal customers are on your doorstep instead of the other side of the country. I think that makes a big difference. And also same thing there, like the badge on your CV. I think in your case, to have a Harvard badge helps more than to have a Stanford badge because you're on the East Coast. What do you think about my observation? Please correct me.
um, it helps. Like, don't get me wrong.
Yeah, no, no, it's
Investors
cool.
sometimes they call it founder market fit. And yeah, I mean, it's important. Early on when we were going through a lot of pivots, we were trying to build products in industries that we don't come from.
Yeah,
And I'm not saying blanket only build in the industries that you come from. There are many incredible entrepreneurs who don't, but it has been enormously helpful to us that
yep,
I come from finance. We are based in New York City. We do most of our selling in person. Like for
yep,
most of our customers, we
perfect.
travel to their offices, and it's helpful that most of them are in New York, although many of them are in other parts of the country as well.
Yep,
And in Europe, we have a bunch of customers in Europe. We're actually about to open up a London office. But yeah, it absolutely helps. Like there is no doubt in my mind that that was a key observation here. And as entrepreneurs think about this, like it's not if you don't come from the industry you're selling to, it's okay. You
yep,
probably should maybe find a co-founder or an early employee who does. Because it both opens the door on a sales level, but I also think building great product, you can obviously do it the technical way or the kind of sterile way in some ways. It's just like interview
yes.
them, learn them, do the product process. But there is something organic about having lived the problem to be able to build a product that really understands the issue and solves it well.
Yeah.
So yeah, I mean, lots of factors, but I certainly think that's one of them.
Yeah, no, I completely agree because so we work with helping organizations sell more and better all over the world, and face-to-face selling is not dead. I've been working a lot with deals which are into the hundreds of thousands, into the millions, and even up to more than multi-billion deals for, of course, for longer contracts and so on. And it is a team effort to close, for example, an IT solution which you indirectly provide. So you might have to engage your salespeople, and then you got some engineers do it bespoke, and there might be some technical people that like to speak technical language with each other, and uh, and that's where it's sometimes tricky to punch on a high weight when you're a relatively small team. So how do you overcome the challenge of having less people than your buyers?
um, yeah, it's a good question. I think early on, when our earliest customers worked with us because they saw two things. One, I think they saw a group of individuals who was really willing to listen.
Yeah.
Um, there's all sorts of software vendors, but most of them aren't able to say yes to the vast majority of things that you ask for. And we were willing to listen and to collaborate and to work really closely with them to get somewhere.
Yep.
Probably the second thing that got them excited to work with us is just the speed at which we would do things. So, you know, they would say, hey, it'd be a little bit nicer if this was like this. And by the next morning, we would have it out for them. Some of that is enabled by the help of AI coding. It makes it a lot faster to iterate, but
Yep.
it's also just that we're like very radical about the pace at which we do things. And so I, you know, when you're the scrappy outsider trying to sell in the early days, you have to leverage the thing that your competitors can't leverage. And
Yeah.
that was our ability to say yes and bring it to life as quickly as humanly
Yeah.
possible.
Yes.
And I mean, look, this is coming from me. If you talk to my co-founder and our CTO, he'd say, yeah, it got us some deals, but I didn't sleep for weeks. There's downsides to this.
I know exactly what he means and why you're laughing.
Yeah, there's downsides to it. Don't get me wrong, but
Yeah, no,
in
no,
the
it's
early
good.
days, it's the old YC adage, which says like do things that don't scale. We did a lot of things that don't scale,
Yeah.
and it was important.
No, that's really cool. So I've asked you lots of questions. So what kind of questions would you like to answer before I allow you to ask me questions?
Oh wow, what a interesting thought.
I know it's
Uh,
not fair, but please think for a second.
I think one interesting point of conversation is at one point in this conversation, we talked about how AI is building software quickly, but there's risk, there's compliance, there's a lot going on there.
Yep.
We we work with a lot of customers today that have are in the early days of like deploying Claude or Claude Code or Cowork across their organization, and their IT teams are seeing the fallout of that.
Yes.
And so one of the things that we think about a lot internally, and I think it's just an interesting point of conversation for those thinking about AI or building, is like,
Yep.
what should we build internally with AI coding agents, AI cowork, and what is tooling that supports that, and how do those two things interact, and what's safe, what isn't? Um, it's a really it's an interesting point of conversation that is just evolving so rapidly,
Yeah.
especially with a lot of IT organizations. And the reason that we're seeing it a lot in finance is just like um, there are more regulated industries, but they are small and nimble enough that they've released the gates here, I think
Yeah.
earlier than many other industries have. So I don't know. Sorry, I started to answer the question before having you ask me it.
No. It's
Uh,
that was the whole purpose that you can fill in the gaps which I might not have thought was. That's really good. So I've been helping lots of different companies all over the world with different aspects of the business. So if you would have a free business coach for the next couple of minutes, what kind of think anything, finance, hiring, firing, ask me anything, and I'll see if we can help.
yeah.
And I will not ask you the classical sales question, what keeps you up at night, because that's a cheesy one.
Sorry, are you going to ask me or I'm going to ask you?
No, I'm asking you to ask me about anything linked to how I can just give you some quick direction for your business if you're open to that, of course.
Okay, got it. I would say some of the biggest, I don't know. I'm trying to think of some of the more tactical ones. One of the ones, Frederick, that is interesting to me is that we are in the really early days of building a beachhead in Europe. So we're about to hire our first people. We're going to base them out of London. We just
Yep.
procured an enormous amount of European data. We're about to move into the European market,
Yeah, I'm
basically.
with you. Yes.
And I'm curious about, and I'm sure you've spoken to businesses that have maybe made this transition or organically in Europe. And yeah, I think that's one of the most interesting things that I'd love to get your take on is just what
Yeah.
am I not knowing about our first foray into Europe?
So think about the first beachhead. London is still very much a super strong financial hub where you got a lot of capital. Not only, well, yeah, it makes sense from many point of view because it is still an entry to Europe as a whole. Plus, your ideal customers, the big players, they are still represented in London. Second potential city would maybe be in the direction of Frankfurt in Germany, because so many of the banks have moved there, but banks might not be your ideal clients. But with the banks being there, the biggest ones, that means also many of these biggest private institutions are also hiding in the shadows over there. So yeah, but absolutely, I've been helping companies move in both directions. And then Same thing here. Right now, it's not the right time to talk about it, but Middle East is also a very interesting place because you got so many family offices there and so many institutions, and the same with Singapore. I'm not so asking like total world dominations right away, but yeah, London is a good step in the right direction. Yeah.
Good to know. Yeah, it'll be interesting for us. So excited to do it.
Yeah, and same thing there. Like the ways how to do it. There's so many ways to just have like your initial first sales team, and then a couple of sales engineers to bespoke and fix it face to face is really good hires. And another thing to consider is acquisition instead of hiring. So there might be a little niche player doing something similar to what you're doing. There might already existing technology that might add to your technology, as well as they might have the network already in place with your ideal customers. So that could be a much faster and effective way, especially if you already have raised finance. I can guarantee that your founders would be keen to add money to strategic acquisition, and that will save you probably 1, 2 years at least.
Yeah, that's a good point. As you said that, I hadn't thought about the fact that there's actually exactly one player that I think maybe I have my eyes
That's
on.
perfect.
So
That's really good.
good way to
Yes.
think about that.
Yeah.
Yeah.
Cool. All right. So the podcast name is Invest in You. What does investing in yourself mean?
Ooh, good question. Um, I think one of the things, or just thinking back to Frederick, one of the first things that you said about this podcast is, or early on in the podcast, was that, um, you know, a lot of being a founder is relearning and unlearning sometimes.
Yeah.
And recently, my investment in myself has been to try to unlearn some of what I have learned so far in my founder journey.
Yes.
And it's been hard. It's been
Yeah, I
really hard
know.
to
I
unlearn.
know. I've
And
done transition before.
I'm trying my best, and I leverage my co-founders as my accountability partners here because I tell them when I'm not doing it, like tell me to back off. But to be specific, the thing that I learned early on as in my at least in my own founder journey was that I kind of approach everything as like a extreme firefighter.
Yeah.
Like if there's problems to be solved, like I refuse to back down from them, and they will be solved. And it doesn't matter if I'm up until 4 a.m. and it has to get done.
Yeah.
Um, and that was really important in our early days. But now that we're scaling the team in all sorts of different ways, being a firefighter is, as the CEO of this business, is a bad idea for all sorts of different things. And it's really hard to unlearn it because it's like a twitch reaction. It's like
Yeah.
there's a problem, I'm like, I can fix it. And I need to not fix it. I need to delegate to someone else to fix it. I need to build structures to fix it. And it's a really hard twitch intuition to unlearn.
Yeah.
And so that's what I've been currently investing in myself is to unlearn something that I think was a superpower that got us to this point, but it's hard. So we're working through it.
Fantastic. Yeah. So the coach fixing is fantastic tool. So you can coach people to do it, so they feel empowered and they dare to do it also without you next time, which means you've freed up time to do your more high value tasks. So congrats, man. Good work. Good work, Ali.
Thanks.
All right. So where can people find you or the company in the easiest way? And of
Yeah.
course, I will add that in the show notes, obviously.
Yeah. So I mean, the company's website is Raylu.ai. Raylu
Yeah.
is spelled Raylu. We're really active on our LinkedIn. And so
Great.
that's probably where you'll see a lot of posts from me personally and from the team. But yeah, that's where you can find us.
That's perfect. Cool. All right. I will kidnap a few minutes with you offline because I've got more ideas for you. So thank
Okay.
you, the whole audience from all over the world. I hope you got something useful that you can apply in your business or thinking, whatever that might be. Last 2 words to the world from you. What might that be?
Oh,
It can be more than 2 words, obviously.
yeah. I say this to my team all the time. It's always be building something. Um, it can be small, it can be personal, it can be in
Yeah.
your business, but um, there's a true human joy to creatively building something. It can be tangible, it can be software,
Yep.
it could be process, whatever it is. But yeah, that's probably what I would say to people. Always build
Oh,
something.
perfect. Good one. All right. Thanks, the world. Take care. Until next time. All the best.